What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I got 3 cheap dividend stocks to buy that are under $40. Some of them have been down since the pandemic. And of course, I'm going to add a wild card stock. And I want to thank you guys. You guys have been fantastic subscribers. You guys have been very active on my channel. I'm going to continue to post videos for you guys. Thank you for the Twitter shout outs. That was fantastic. Well, I'm close to 700 followers. We can have group chats on there, the Twitter chats. That would be amazing. But let's check these stocks out right now. I have a real estate investment trust, Weyerhaeuser. This is actually a very popular stock. Thank you, Matthew Ramey, for bringing this dividend stock to my attention. This is definitely on my radar. This is a very specialized real estate investment trust. It did take a little bit of a nosedive during the pandemic. As you can tell, it was $15.34. A lot of you guys that got the dip, kudos to you. It's starting to slowly get back up to where it was. Dividend yield is 2.02%. But once I show you its portfolio and its dividend history, it might get rolling again. So this is what's exciting. So let's check out its portfolio real quick and what this REIT is about. So this is a real estate investment trust that really goes into forestry. So this is what's really interesting. They have timberlands, they have forestry, which is great. They have log sales, they have seedling sales. So these guys are a real estate investment trust that really focus on land with timber, things with trees, things with wood and everything. So this is what makes it really diversified. And this is what's really interesting with these guys. So here's another thing. We've been developing new building products and solutions for more than 100 years. We're your source of value-added solutions that improve performance, safety, and profitability. From builders to dealers to specifiers and homeowners, we offer exceptional product performance and unparalleled support. Say that 10 times fast. So they got lumber, OSB and panels, engineered lumber. And then they said, we are deeply connected to our communities where we operate. We made our first charitable donation in 1903 and have provided more than $222 million in grants through our formal giving program. So these guys are a real estate investment trust, obviously timberland. You know, they have good wood products. Real estate investment trust, remember, 90% of their earnings go back to us as investors. I really want to show you one more thing with these guys. So we're one of the largest landholders in the United States. As stewards of their assets, we maximize the value of every acre, from responsible development and building materials to conservation agreements and mitigation banking, real estate, developmental projects, minerals. We're active in mineral exploration, production, and development of 11 million acres of land in the United States, aggregates, conservation, mitigation, banking. So this is very exciting about these guys. So they're huge, but let's talk about their dividend history. So this is what I like about these guys. They're a nice dividend growth stock. And during the pandemic, they took a hit. Obviously 22, 29, 31, 32, 34, 17 cents. PE ratio 18.95. Dividend yield of 1.98%. Annualized dividend of 68 cents for right now. But keep an eye on this one. Again, none of this is financial advice. It's for entertainment purposes. Disclaimer in the description in my videos. But $33.73. Took a nosedive, slowly getting back. How can you say no to Weyerhaeuser? Let's go to the next dividend stock. What's that phrase I always say? Take it to the bank. We got Caddy General Bank Corp sitting at $37.87. 3.27% dividend yield, market cap $3.02 billion US dollars. PE ratio of 10.85. Primary exchange is on the NASDAQ. So it has not done well against the S&P. Let's just check banks. Okay, pandemic. Let's see what happens with its history and its revenue real quick, because banks, sometimes you got to be careful a little bit. Let's check out how much revenue they've generated, and then we'll go to their dividend history. Okay, so look at these trends. 2014 up, 2015 up, 2016 up, 2017 up, 2018 up, 2019 up, 2020 a little bit down. But I like this because it's going up. Now, you can play the pandemic card, but this bank is doing pretty well financially. It's going up just about every year except the pandemic. That's a given. People weren't taking money out. People were very tight on money. People lost jobs, very, conservative with their money. I see this going right back up. Again, this is not financial advice, entertainment purposes, but take it to the bank. Banks make money. They generate money. Again, you swipe that card anytime they generate cash. I was out with one of my friends from nursing school. She had a Huntington Bank share card, and I'm thinking to myself, yeah, anytime they swipe that, I'm making money. Is pretty much that's the thought process, because remember, they're going to generate dividends. They're going to distribute dividends. They're going to increase their dividends over time. Banks usually do. They're pretty good dividend growth stocks. Anytime you swipe that card, they generate revenue. So, somebody has to pay the fee for using the credit card. So that's what's great. I'm going to be out with a buddy that's back in New York. I'm going to be using my Capital One card. And again, if you're interested in the Capital One card, 3% cash back. I'll put my affiliate link in there. It's pretty nice. It's a pretty good deal. I use that all the time when I'm out for dining and stuff. But look at this. The revenue is going up. You're swiping your card. Look at its dividend history now. Oh, man. Look at this. 7 cents, 10 cents, 14, 18, 21, 24, 31 cents. Now you can blame the pandemic card for it not increasing its, price per share and the dividend, the annualized dividend. You can blame the COVID card, but Caddy is 3.3% dividend yield, 10.85% PE ratio. How do you say no to that? That's definitely on my radar when I create my M1 Finance dividend portfolio with the financial sector. Absolutely love it. Absolutely love it. It's cheap. It's less than $40. How do you say no to that? Let's jump to the next dividend stock. Left this cheap dividend stock, a 5.33% dividend yield, a real estate investment trust, medical properties. This is a phenomenal dividend stock, especially a real estate investment trust. Has not done well against the S&P. Took a little bit. It was right in line with it, and then it took a nosedive. But if you look at the portfolio in MPW, looks very strong, and I'll go over that with you real quick. But a fear that people told me on Twitter, but per share net income of 0.19 of normalized FFO and of 0.43 in second quarter, per share NFFO and AFFO growth earnings exceeding 13% compared to prior year quarter, year-to-date investments of more than 3.6 billion. But let's jump to their portfolio real quick. Now this is what's phenomenal. MPD owns hospitals in 32 U.S. states, 6 European countries, Australia, and South Africa. $22.3 billion in their total portfolio, 446 facilities, 9 countries, 47,000 licensed beds. 72% of their portfolio is general care acute hospitals, 10.7% behavioral health facilities. Behavioral health is it's off the chain. It's crazy. I mean, it's very sad, but behavioral health is just getting worse. Inpatient rehabilitation hospitals, long-term acute care hospitals, freestanding ER urgent care facilities, and other. They're not going anywhere. They're in 9 countries. Now, look, I'm going to just say this. The pandemic was bad. Behavioral health is worse, okay? The pandemic was bad with people being hospitalized. Look, I'm a nurse working on COVID units and have worked on COVID units. It's bad. Behavioral health, people who have not seen their specialists or people who have held off, depression, it's off the chain. And unfortunately, people are being admitted and readmitted all the time. Very sad. Long-term care, acute care hospitals, people are not taking care of themselves. Baby boomers not taking care of themselves. General acute care hospitals, people are sicker going in the hospital. It's very sad. I hate to say that. I don't want to be a negative Nancy or a Karen, but this is what's going on. People are sicker. They're not taking care of themselves. It's terrible. It really is terrible to see this, but that's their choice. People don't want to take care of themselves. They don't want to take the vaccine. The vaccine, with COVID-19, it has proven it has reduced hospitalizations and, significant, disease, post or symptomatic results. So people don't want to take this. People don't want to take care of themselves. They want to smoke. Like I said in my previous video, Altria, Philip Morris, British American Tobacco, they're still off the chain because people don't care. They're going to smoke. And this is what happens. They go to these places because they don't take care of themselves. Diabetes, hypertension, obesity, renal failure, all of these correlate to this. I see this stock is very strong, a very strong real estate investment trust. Let me jump to the dividend history. Okay, remember, rates usually increase their dividends, and you're seeing it right here, 20, 21 cents, 22, 23, 24, 25, 27, 28. Now, I just posted a video yesterday on BPY and like this crazy sale or the merger thing. I think more shares are going into MPW, and I'm okay with that because it's a 5.39% dividend yield, PE ratio 22.86, annual dividend of 112. But look at this, it's increasing its dividend. This is a big real estate investment trust portfolio, and it's not going anywhere because people are getting admitted, readmitted. Self care is not there. Unfortunately, people do ineffective coping mechanisms and they go to behavioral health in these facilities. These are very busy facilities, and kudos to those guys that work in the psychiatric field. I don't know how they do it. I was just out with one of my friends who's a nurse practitioner school, female, actually very good looking, by the way. I used to joke around with her and say, "You're the best looking female in our accelerated nursing program and nursing program." So kudos to you. But her and I are good friends, and this is what they see all the time. So very, very it's very, very sad. And just these beds are going to be filled. I mean, hospitals are boarding like crazy. People just non compliant. It's very sad to say, but this is what the trends are going. Obesity is off the chain. Like I said in my one video I did with Pfizer and antihypertensives in my class, my lecture, like it's going to be billions and billions of dollars in 2030 just on hypertensive medications. It's only going to get worse. Let's jump to the last dividend stock, my wild card stock. That stock would be Hanesbrands. Now, I always joke around and say, sometimes nurses on very toxic floors, they go through nurses like we go through stocks. Socks, excuse me. That last stock, would be Hanesbrands. It's sitting at 1826. Underwear. Okay, everybody needs underwear. Everybody needs socks. Everybody needs, stuff that Hanesbrands carries. I mean, I used to joke around and say, with the Cleveland Indians, they go through players like everybody else goes through Hanes socks. Well, that's kind of true because Hanes socks is a very good brand, and people, every time I go to Walmart, it's always there's nothing on the shelves. People buy it like crazy. It's a very good stock, and it's cheap. And it does have a nice dividend history, which has slowly gone up with a 3.29% dividend yield. And they generate a ton of money. Market cap 6.37 billion. I'll show you how much revenue they've generated. Very slow trend from 5 to 6, right around billions of dollars. So they generate a ton of money. Michael Jordan used to be one of the sponsors, obviously, of Hanesbrands, but they're not going anywhere. They're just going to still go up. They're still going to adapt. Look at these slow trends of them increasing. They have a slow dividend increase, but they're still a dividend growth stock, which I'll show you in a second. It's a little on the slow side. You got 10 cents, 11 cents, 15. It's still stuck at 15 right now. You can blame the pandemic for not increasing, but it's $18.26 with a 3.32% dividend yield, annual dividend of pretty much 60 cents. So this is a cheap dividend growth stock. It's not too fast, it doesn't jump up too fast, but you're going to get a good bang for your buck for that one. So again, none of this is financial advice. This is for entertainment purposes. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. You guys have been fantastic on my channel, almost at 5.1K subscribers. I cannot wait with this. I'm on TikTok, which I'm on Instagram, and I'm also on Twitter. And if you follow me on Twitter, once we get to 700 followers, we can have a huge group chat together. And I don't have to be on here live discussing things with you guys. It'll be fun to actually chat with you guys for the first time ever, instead of just typing stuff and listening to your responses. So you guys take care and have a good one.